2 cherry bombs in one day? Yep, that's right. Stay tuned because here we go. Hi everybody, it's Neil here again with Option Theory. It's May 21st, 2020, and I missed yesterday's cherry bomb, so you're going to get 2 today. So, with that said, we are going to move as quick as possible. So, yesterday's trade was a trade in the VIX, and I'll have to tell you, reading that email, which, by the way, I always say this for the people that are new to the channel. If you're new to this channel, we put on cherry bomb trades. What are those? Those are trades that come to us via email from tastytrade.com. Link is in the description below. Head over there. You can sign up for their email blast. I don't get anything from them. I just send you over because I'd like you to get those emails. I think it'll help you grow as a trader. So that email that we received yesterday was over my head with all that contango business, but definitely piqued my interest and has me wanting to learn more about that stuff. But we missed a day's worth of trading and there was some movement. So what I'd like to have happen is I'd like to match today's trade to similar deltas to yesterday's trade. So to do that, instead of the suggested strikes, what we're looking at here then is a 36.38 vertical, right? So I'm going to go over here and right click on the 36. And by the way, I'm in the June weeklies here, or month. I think that's not a monthly. Is it a monthly? It's a monthly. All right, cool. So I lost it. There it is. Monthly, 29 days left to expiration. And I'm going to go over here to 36 and in the call side, right click, choose analyze sell trade, go to vertical. It always builds a smallest possible width. I want it to be a $2 wad. Collect a credit of roughly 56 cents. You know what though? I think I can probably get filled better than that. So I'm going to up that to about, let's go with 65 and see what happens, right? I want to do that. And then I'm going to look at the risk profile, see where we are. Up here, the date's always wrong. You want to choose this to the expiration for that one. And we're going to be on down over here and set the slices to break even at expiration. And now it's much easier to see some things here. We can see that we benefit, of course, if VIX goes down or stays where it is. We don't want the volatility here to go up. So we're getting a 65% probability of at least breaking even on this trade. So that's that one. I'm going to right click this and click confirm and send to review the max profit, max loss, right? So that's typically where we want to be. So I'm going to hit send and move on to our next trade. The next trade involves the Qs. This is today's trade, actually. All right, so let's hit the charts. As soon as that loads, okay, we can see that it's definitely has come back to basically nothing's happened, right, to the tech land. All right. So what today's proposal is an iron condor is a neutral trade. If you think it's not likely to drop and not likely to break through that high again, basically we're looking to build an iron condor. So I'm going to click on analyze, go to add simulated trade. I already have the Qs typed in here, and we're going to be bringing this down for a little more room. And with this one here, we are going to the June, I believe we're going to weeklies with the 36 days to expiration. And we're going to be doing a $2 wide iron condor. And it's a 215 put and a 247 call. So you don't need to dial those in. I just go to the puts, right click, choose analyze sell. And it always disappears on you if you're not careful. Go down to iron condor and now we can make our adjustments down here in the order pane. So the puts, 215, we're going to go $2 below that to 213. The calls, we're going to take a short call to 247. And then the long call will be $2 more than that, 249. Now, of course, I'd like to look at that on the risk profile. Set this expiration to June 26th. Okay, and set the price slices to break even at expiration. and we're looking at a 57, let's round up, percent probability of at least breaking even here. We can see that we're pretty close to smack dab even in this iron condor. That's nice. And so with that said, what kind of credit are we collecting? We're collecting near that 65 like we just saw. Why is that? Because remember, the tasty trade mechanics is to try to get 1/3 the width of the strikes, right? So we'll review this. We'll see once again, we're getting a similar max profit, similar max loss with a 57% probability, which is better than 50-50. We like that. Okay. So I'm going to hit send. That's going to go over into my working orders. I have 2 working orders because I was a little bit off and I didn't do yesterday's video. Apologize for that. Hey, if this is the kind of thing that you like doing, putting on trades in a simulated trading kind of an environment, or if you like putting them on for real, but you want a place where you can come and practice stuff, then this might be the channel you should subscribe to. So if you could, leave me a like if you liked it, hit that subscribe button and put a ring on it by hitting that bell. I'd really appreciate it. And let me know in the comments, do you put these on in simulated trading, or do you put these on in real trades, these cherry bombs? All right. I hope to see you in tomorrow's final cherry bomb of the week. Take care and happy trading.